Joining us now, S&P Global Market Intelligence Senior Analyst Lindsey Bell is here. Good morning, Lindsey.
Good morning.
All right, so first of all, let's talk Alcoa because it unofficially, officially, whatever, kicks off earnings after the bell tonight. This is historically what we have had looked to Alcoa for some sort of guidance. Is it still a bellwether for the economy?
I don't think it's the bellwether for the economy anymore. I mean, our economy is not a manufacturing economy so much anymore, especially if you've seen the manufacturing portion of our economy has sort of been in a recession.
So could it tell us anything as we
it will give us an idea of what global growth is going to be like. So there are some things you want to pay attention to. But I think more importantly are going to be the banks, which come on Thursday and Friday. JP Morgan, BlackRock, we got Citigroup, Wells Fargo.
So what are you expecting there as we are still in this historically low interest rate environment?
I know it's not going to be good. The financial sector is expected to have the second worst growth out of the 10 sectors that make up the S&P 500 with an 8.4% decline. That's not very good. This is a sector that analysts have been looking to and investors have been looking to break out at some point. Valuations are so low, but until interest rates start rising, it's going to be tough for the sector. The one bright spot might be mortgage applications. I think people are looking to Wells Fargo.
So these are some of the estimates for the S&P sectors. So energy is expected to take a huge hit. Financials, materials, information technology.
Yeah, energy is certainly the laggard, but believe it or not, that's an improvement from the 106% decline that was the first quarter saw. So we saw an improvement in energy. So actually the second quarter, the 5.3% projected decline is better than the 6.8% decline in the first quarter, which we think is the trough in the earnings recession. So we're starting to see an improvement. I know 5.3 down is not very good.
Okay, so how do you play this heading into earnings season?
It's all about the consumer. Once again, the consumer discretionary sector will be the leader, 9.4% growth. It'll probably end up in double digits for the 5th consecutive quarter, which is very impressive. You're seeing consumer spending tick up. You're seeing confidence stay strong. The housing market is improving. Within consumer discretionary, the autos should lead the second quarter. I know we're starting to see deceleration in auto sales, but GE and Ford, they're just going to have a really blockbuster quarter, and they have a heavy weight in the index, so that makes a difference. But also Pulte, a home builder, and you want to be in the internet. Amazon's going to have the best quarter.
Wow. High the stock was. It keeps hitting all
talking about the consumer as we see, is this low gasoline prices finally exerting the impact we expected, or wages coming up? Why do you see consumers now spending and leading the way?
Well, I think it has a lot to do with confidence. I think they've right-sized their balance sheets because of the low gasoline prices. Actually, in the second quarter, gasoline finally, reached the $50 mark per barrel, and it's still down year over year, 21%. But that's less pressure than the 31% decline in oil prices we had in the first quarter. But I think a lot of the strength has to do with the dollar stabilizing. We saw it down for the quarter. That makes a huge difference across many industries.
It's interesting to me that you're talking about the confidence that consumers feel, but we're hearing the Fed chair completely talk about the uncertainty in the markets. We're talking about CEOs and small businesses even saying that there's a lot of uncertainty there and that they don't feel that the economy is strong. So help me understand the disparity there between what we're hearing from CEOs and the Fed chair versus this confidence you're talking about with the average consumer.
Well, I think business owners have a much different perspective. They're worried about the election. They have to worry about the policies that will follow from that, the global outlook. If you have exposure to overseas economies, 50% of sales from the S&P 500 come from overseas. But here, the consumer is feeling good. Wages are up very significantly on a year-over-year basis, something we haven't seen in quite a while. I know the May jobs number was bad, but we saw June, Friday. That was a great number. So the individual consumer is feeling good about their position. Businesses, it's a very difficult environment to operate in, which is why earnings haven't been very good.
Yeah, I mean, we just heard from the head of a regional bank, Westchester Bank, earlier, who just said the regulations and healthcare costs and the obstacles just continue to mount. Try to run their business.
It's very true.
All right, Lindsey Bell, good to have you. Thanks for joining us
Thanks
this
so
morning.
much.
By the way, as far as the stock market reaction to the earnings forecast you put out, stock market end of year still up from where we are? Do you predict?
Yeah, we predict it'll still be up quite a bit, but the problem is valuations are really high.
So. All right. Look at Amazon.
Yeah. All right. You're pretty optimistic there. All right, Lindsey Bell, thank you. All right.